Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. If you'd all let me know whether you can hear me okay and whether you can see MTPredictor with our risk disclaimer there, that would be much appreciated. Just check through I'm coming in. Coming in good, 5 by 5. That's all right, David, well done. Right, so let's have a look at the risk disclaimer. Remind you all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at some losing trades today. As such, all trades are your own sole responsibility, but it's most important to understand that losses will unfold. No matter what trading approach you do, there always will be losing trades. That's part and parcel of trading. Right, let's take that down. Right, what a difference a week makes. Last week was a very enjoyable webinar for me. In fact, it was a very easy webinar because we had some absolutely perfect patterns on the USE minis the day before. Whereas this week it's going to be a lot harder because I want to look at some of the things that didn't unfold as anticipated, look at some harder markets when they're not really doing what they should be doing. In other words, it's the other side of the coin. There's a good spaghetti western in the 70s, was the good, the bad, and the ugly. So last week we had the good where it's really good. This week we're having the bad and the ugly. And it's important to talk about days like this because this is what real trading is about. I don't know about you guys, but there's far too many software vendors and gurus who only ever just show you amazing profits and tell you how easy trading is and sugarcoat everything and make it sound just so easy. But actually, real trading is not like that. And hopefully you guys appreciate a bit of reality. That's what I believe in teaching as well. So. Right, I've got a question by Carmen, which I want to get to a bit later in the webinar. So if he's in the webinar, remind me on that a bit later. But first, I want to just review what MTPredictor is all about. Doesn't matter what markets and timeframes you're trading, we use the same approach for any market, any timeframe combination. So what's MTPredictor about? You can see here we have some automatic setups on our chart, some little history triangles here. We have a color-coded trend indicator. So is MTPredictor a black box where you just simply follow all these trading signals, perhaps in the direction of the trend color, and that's it? Or is it something different? Well, it's something different, and it's a very important reason why it's something different. It's because markets go in cycles. Last week was really good. We had some really clean, perfect-looking patterns. This week, as we'll see, the patterns aren't so clear. And this is why it's important to only trade or only do analysis when the pattern's clear. And that's only about half the time. So 50% of the time, or maybe even slightly more, you just have no clear pattern. And that's why so many black box and 100% mechanical trading systems basically fail, or they don't stand the test of time, because the markets basically go into random phases and this all just fall apart. So of course, the question I can hear you all ask is that, well, that's all well and good, Steve, but how do we define when a market's in a clear pattern? In other words, when we can look to try and then find some trading signals? Well, for this, we use a multi-time frame approach. So we have whatever time frame you're looking at. This is actually a chart of the DAX from this morning on a 3-minute chart. So for this, if you're looking at trade signals on a 3-minute, you'd go out to a time frame between 3 and 5 timeframes higher. So in this case, you'd go out to a 15-minute to then place your larger degree DP support and resistance lines on. This is where we get our idea of our trend direction. If you're using, say, daily stocks, you'd use the weekly. If you're, say, trading 4-hourly charts on Forex, you'd perhaps go out to the daily. So you use timeframes between 3 and 5 timeframes higher. So I want to just go back, sort of early in the day today, or even before today even started. So what we do is we place DPs on the charts. Now, I've had a good look at what pivots to use a couple of weeks ago, and there are recordings for customers of that particular webinar. But here you can see we fairly significantly, we had a major pivot high back here. Can you see that? A major pivot high back here. So we'd hover over that pivot high, right mouse click, do decision point. Can you see how that gave you an area of resistance? It gave you an area of resistance on the chart in advance. In other words, before the market even got there, when it was chopping around here, this was there ready for you to, or or be ready for you if the market got there. We're not projecting it's going to, but if it does, then we can have a look at something because it's started becoming a bit more interesting. If I turn trading mode off, this is what happened this morning. The market rallied, went up into that level, and as you can see, that then tagged the high beautifully before it reversed down. So let's see what difference that makes when you come down to the 3-minute chart. Again, I'll just use our trading mode. Go back to here. So can you see how suddenly the picture looks quite clear? In other words, that's our higher time frame resistance. We've now got a sell set up at our higher time frame resistance, which also agrees with our MTP trend. In other words, this is either red or black. Red is down, black is for the process of making a reversal. So can you see how everything is now suddenly telling you the same thing? And I'll contradict this with a look at the ES from yesterday. Was it the ES? Yeah, well, the USE minis yesterday to show you how sometimes this isn't clear. So this is what I want to do in today's webinar. I'll show you, the ugly side as well. But first of all, can you see how suddenly this becomes clear? In other words, you've got a higher time frame resistance area with the market making a reversal at that higher time frame resistance, and our MTP trend colors telling you the same thing. So now we'd right mouse click, we'd do analysis, and this gives you your position sizing. This is the full DAX contract, so I've used quite a large account. If you're trading smaller contracts, you're probably using the mini DAX for your position sizing and your actual trading. But can you see here how this gives you your entry level, your stop level, and your target? So if you're entered into a trade, let's go further forward, you'll see there the market then took you into a trade, you'd now be short. If you're now stopped out, and we'll see some losses in a minute, you'd be risking one risk unit. In other words, this is one risk unit, 1R. If you get down to the profit target, that would be a profit of 2.2R, or just over twice the initial risk. If I turn trading mode off, you can see that's indeed what the market did. That so far is the high of the day today. So isn't it nice that you had a level on your chart that basically has called the high of the day so far for you, and after that the trend has been down. In fact, it's been chopping sideways later, but obviously you didn't know that at the time. So here the market came down and gave you a profit, a nice 2.2R profit. So that was quite good up to there. That point was really good. So let's have a look now at the not so good sides. So here is a bit later. Again, the pattern looks to be clear, doesn't it? We have our larger degree of resistance. The market is going down. It's making an ABC correction back up again. Our MTP trend is red. In other words, everything is telling you that it looks like this is going to be a market that's going to carry on declining. So as we did before, we right mouse click, we do analysis. That gives you then your position sizing and your potential target, which is right the way down there. You get taken into a short trade. The market started to go with you quite nicely, but then bang, it stopped you out. So this is what I wanted to show. Losses can and will and do happen. This is a fact of life. So no matter how good the picture looks at the time, the market can go against you. That's why we have stop losses in there. But this is why we use position sizing, because our profit on the first trade was plus 2.2R, but this would have now been a losing trade. Should have lost minus 1R. So the loss was kept small in relation to the profit. If I go forward a bit, it actually came up and gave you another attempt. Again, this still looked to be a good trade setup. Taken into a short trade, and then pretty much stopped out pretty much straight away. So that would have been another losing trade. So plus 2.2 minus 1 is still about break even for the day, isn't it? And if I turn trading mode off, you can see the market has just drifted sideways since then. So this happens. This is the ugly side of trading. This is what can happen, is that no matter how good the picture can seem at the time, does not mean you'll always have profitable trades. The first one was profitable, but these other two weren't, but the loss was kept small. So last week when I did the webinar, it looked really easy, didn't it? You had a great, perfect pattern. The market then went perfectly, gave you a profit, and that was it. You walked away from it very nicely indeed. But this is why I wanted to show this today, is no matter how perfect the pattern is, sometimes you'll have profitable trades, sometimes you'll have losing trades. Then can you see here, this is what I mean by the market going random. After this, it's now chopping sideways in just an absolutely horrible pattern. So here you'd now look at this and say, well, I don't really know what the market pattern is doing. Therefore, you'd stand aside and just keep out of the way. But that's the idea of what we're trying to do with MTPredictor, is we're trying to keep out of when the market pattern is yucky and horrible like this, but we're wanting to see when everything comes together with a clear, clean pattern. Does that make sense from everybody so far? That what we're looking to do is that we're understanding that markets are random half the time. So what we're looking to do is then when the market pattern becomes clear and we go to the higher time frame chart and place our larger degree DP zones on the higher time frame chart. So when the market rolls over at these levels, in other words, when it does what we anticipate it's going to do, we don't forecast it's going to do that. We just anticipate it and say, right, this is our level. The market has made a reversal of that level, and now it seems to be going in our anticipated direction. Then you can do your shorter term analysis. And hopefully over time, you'll have profits that are large, but not just large in dollars, large in relation to the losses, and you'll have losses that are small not again in dollars, but small in relation to the profits. And that's what successful trading is about. And quite often, you'll have a situation where you'll have small profits and small losses like this, or profits aren't absolutely huge, but you'll basically be treading water. Lynn, no, these last two trades weren't at the DP. They were after the DP, but that's where the DP was. The market made a reversal there, so it looked like it was actually declining quite nicely off that DP, and then these were making just an ABC correction back up again. Do you see that, Lynn? And in the direction of our MTP trend. So it was down. So this looked like it was a high, an initial move down, then an ABC correction up to then look to move back down again. Yeah, it's what we used to call the old HGs. I mean, they're called W3 or Wave 3 trade setups now. Yeah, exactly, W3s. But I just wanted to show you that no matter how good it looked at the time, sometimes he will end up with losing trades, but the losses are kept small. And that's just the fact of life, is you will get days like this that, here we'll just say that was break even. Right, let's have a look at the USE minis for yesterday. So I want to have a look at, well, let's have a look at the NQ and the YM here. They were basically in the same kind of position. Let's try the NQ first. This again is a 3-minute chart. So for the higher time frame support of resistance, I'd go out to the 15-minute. There's my DP I left on from yesterday. That's my own analysis. So here you'd have gone back to the previous low, which was here. Remember, this is the last swing into the high. This is what we're looking at last week, the last swing to the high. There, that would be your DP. That would be the area of potential support. So when you go down to the time frame you're looking to follow, this is what we're looking at. We're looking at that the market is going to come down into this particular support zone. And of course it didn't. In fact, the market was a really horrible day. Look at that, it just chopped sideways. But this is what I wanted to show you, is that I've actually said that the large view trend looking like it was down into that support zone. But look at the MTP trend. The MTP trend says it's blue. So in other words, the two are telling you the opposite thing. In other words, the picture's not clear. And this is again what people seem to, you must understand, is that these are only indicators. And what we're looking to do is we're looking to use them to tell us when everything is telling us the same thing and everything is agreeing with each other. When you get situations like this that fairly obviously we haven't reached that support zone, but our MTP trend is blue, the two things are telling you the opposite thing. So therefore you shouldn't be doing any trades here, because you don't know whether the large view trend is still down into this level, or you don't know whether it's blue and it's up off that level, because there's no, hasn't reached the level. So this was a perfect example of when the picture's not clear, and literally yesterday you should be standing aside. Now, of course, in hindsight, when you come back and look at it now, that was actually the perfect thing to do, because look at it, the market went nowhere. So standing aside on a day like yesterday would have actually been the right decision. Same with the YM. There was our our 15-minute support zone. You know, it never got there. Both of them were telling you that a confusing pattern. The only difference was on the ES. The ES did actually get there. Here's the 15-minute DP. I'll just take that off. So this would have been on the chart before yesterday even opened. Remember that? These are on the chart in advance. So that's before yesterday even opened. There's the previous low. You right mouse click, decision point. Before the market even opened, that was a potential support zone. That's what the market did yesterday. So when you come down to the time frame you're looking to follow, there you go. Isn't that nice? Then when the picture comes in a lot clearer, is that before yesterday even opened, that's where you anticipate what support would be. And look what happened. The market opened, dipped down into that support. That turned out to be the low of the day. Our MTP trend was gray as it came down into it. As it went back up again, it turned blue, and it was blue for the rest of the day as, well, you know, it didn't go anywhere, did it? But you can see what I'm trying to say is that that was actually the support zone off the low of the day. So because here, you'd now be looking for buy setups. So when this TS3 sell came through, you'd be avoiding that because obviously it was clearly at support there. It was clearly blue. So everything was telling you that the large view trend was up, and therefore you'd be looking for buy setups. So of course, when you come through to this one, at the time, this looked like it was a potentially good setup. Can you see that? There's your support. There's your blue MTP trend. At the time, it looked like everything was starting to go up quite nicely. So right mouse click. There's your analysis. There's your position sizing. Everything was looking quite nicely indeed here. However, this is something I want you just to be wary of. Is look what happened the next few bars. Let's go forward a couple of bars. Inside bar, no trade. Inside bar, no trade. Inside bar, no trade. Inside bar, no trade. The market is basically drifting sideways. When this happens for so long, that's just starting to tell you to alarm bells are ringing. So as a more experienced trader among you, you'd probably start thinking, hang on a second, there's something not going right. In other words, the market is not doing what I anticipate. Here, I reckon that the market was going to be going up. IMTP trend was blue, off the support. You know, you're looking for it to start going up here, but it wasn't. It was just drifting sideways. So when the market is not doing what you anticipate it should do, can you see how alarm bells should start to be ringing? And you're thinking, well, hang on a second, I don't like this. It's not doing what I anticipate. Probably better to cancel your orders and then just leave it. And actually that would have been the right thing to do because the market did just clip in and they would have clipped you out for a -1 hour loss. Did you want to try and take these setups here later in the day? Probably not, because what on earth is the pattern back here? Well, it's just gone sideways. When you see this, this is not what you're looking for. This is not the kind of pattern when it goes chop, 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 chop in a really narrow range. This is not the kind of thing you want to be looking to trade. The only things that you may want to be looking to trade on this is if you get any VS spikes above and beyond what are potentially parallel channels here, but that's probably a bit more advanced. In other words, you're looking to trade the fake out as it looks to break out and back in again. But that's probably quite, you have to be quite experienced to then look for those. But so on the initial level, you see why yesterday would be a good one to avoid, because it wasn't really doing what it should do, even though we called the low on the ES quite nicely yesterday. Does that make sense to everyone on what I'm looking at today? Again, this is, if you're new to MTPredictor and this maybe is one of your early webinars, this is so different to what it was last week. Last week, we were looking at the YM that had an absolutely spot on perfect picture. It was picture perfect and it just worked out absolutely beautifully. This is the ugly side of trading. This is the days that really, you earn your money. You earn your money when you're standing or you're sitting there just watching the market going nowhere. But that's what I said last week, is because the market's going cycles, because it was good last week, you knew that you were going to get some harder times coming through. The opposite is on this week, because Now you've had some really horrible days and some yucky patterns. The other side of the coin means you're now probably going to get some good trades coming through. So that's when you want to be more aggressive to start looking for some good patterns coming through over the next few days. It's like a wheel going around. You always want to be anticipating what's the next part of the wheel that's going to hit the ground, so to speak. And all this lot comes with experience. Now, we don't know exactly when the good trades will come through or when the good trades won't. It just means it's more likely to be, the other side of the coin. Does that make sense to everybody? What we're looking at here, in particular, looking at some of the days that aren't quite so nice. Hopefully you'll appreciate this when we look at days that are horrible, because that's probably a good part of the training to show you when you shouldn't be trading. And I guess there are very few gurus that actually spend a lot of time on that as well, but then it's very important. It's very important to actually know that and understand that. Right, I just want to have a quick look at a screenshot from one of our customers, Karen. He sent this in last week, and I can't answer individual emails because I'm not allowed to, because it's financial advice, but I can do general in webinars like this because I'm not talking to one person in particular. What he was saying, this is a screenshot from his own analysis himself, and he was looking at this particular decision point. This decision point was taken from that pivot, you can see. So that was like a major resistance, and he also had a potential edit wave count on going up here. So his question was basically, what should we be looking at here? Should we assume that this resistance is now the larger degree pivot and the market's going to carry on going down? By the way, Carmen, I don't know what the market did after this because I don't follow gas, but he was saying, or, do we then wait for the market to go up to the wave 5 high? So here it looked like there was two contradicting things. It looked like this was a high where the market was going to start to turn over and come down, but the Elliott wave pattern looked like it was going to go up to the wave 5 high there. Well, again, this is where there's two contradicting things coming in. So what I'd suggest is that when you have something like this, the one that's probably going to take precedence is probably the DP. So more than anything, it would have been nice if there'd been a wave 5 high here and then it rolled down. That would have been better. But if it's like this, you'd probably look for more than likely the market to reverse at that DP and then start to come down. Then you look for the short trades after that. Carmen, what did the market do after you sent this through out of interest? Can you remember? Because I know this was a couple of days ago. But hopefully it makes sense. What I'm saying here is that this probably isn't an ideal picture because the two things are telling you contradicting. He said it went through both levels. Okay, he said it carried on up and went through both levels. That's fair enough. That happens sometimes. That's just in the case of where it just didn't turn out as anticipated and went into what we call the random phase. So that can happen. But if this happens again, look towards the DP first and foremost, rather than the Elliott wave pattern, if that makes sense. I think that's really what your question was. Right, let's have a look at some currencies. Talking about, let's have a look at the British pound. Take all my analysis off here. Look at this. Look, I give the game away, don't I, with my own analysis. This was the British pound a few days ago. This is before basically Johnson had our Prime Minister had a chat with the Irish Prime Minister, and basically they said they might well be able to find a way through. But let's do some MTPredictor analysis, and let's put some levels on the charts here. So this is a daily chart of the British pound US dollar. So where's the last pivot high? There's the last pivot high. We right mouse click, do decision point, up at the 126, 127 level. That looks awfully high when the pound was down at 122. That looks awfully high, but look what the market did once they started to get together and have a chat. The market rallied 2 hugely strong days, but look where it stopped. I find that absolutely amazing that what it did was bump straight into this resistance zone that we would have had on our charts literally days in advance. So if there were any other reasons why you were long the British pound up here, that gave you a perfect place to then to look to take profits. And obviously, if you come down to the shorter time frame, you can see it even clearer. Market rallied strongly up into that level there. So I just thought that was amazing the way that level was on our chart. But in this strong rally here, look where it stopped, right at our decision point. So this could be a handy thing of when, or if you're using MTPredictor in conjunction with other tools that you use, then you can see how powerful these decision points can be to help you with your other trading decisions that you may be making. You know, I'm quite happy if you've got other tools to use alongside MTPredictor. That's absolutely brilliant. You know, the main thing for you is to use tools and techniques that works for you individually. It'd have been lovely if we had a MTPredictor buy set up here. But it just didn't quite do that. Lynn says to have a look at crude. Let's have a look at crude. Let's have a look at workspace. We've got workspace on crude. Yeah, I haven't looked at crude because I don't tend to follow crude myself. This is now October. Are we still in October, or do we need to go out to November crude? Let's have a look at November crude. Yeah, I thought it's amazing crude how quickly it rolls forward, isn't it? Let's have a look. Daily. Month. November. Yeah, and that's amazing what it's done. Remember, we had this decision point level up on the chart there, and that's when it made the high, declined down. It's been declining down, but just look what it's gone into. If I just use the training mode, I'll jump back a bit into here somewhere. This is the last swing into the high. This is what I was talking about a few weeks ago. Yeah, it was the drone strike. That's exactly right. That was the last swing into the high there. So this is the first place to look for DPs off that pivot, which is the last swing into the high. So you'd right mouse click here, do decision point. That will give you an area of potential support out there in advance. Let's turn training mode off. What did crude do? Bang, down. So that decline there, look where it stopped, right at this decision point. So now if you're looking to trade shorter term, now you'd be looking for potential buy setups on the shorter term. Well, that was a lovely W3 trade setup there. It's just a real pity that it didn't get to its first target. But here's a good question for you. On this particular chart here, let's go back to here somewhere. So this looked like, again, it was a good W3 trade setup, a good long trade setup. There's the support, IMTB trend was blue. But here's a question. Where would an area of minor resistance be on that particular chart at the moment? Not that one up there, but where would it be? What do we tend to do to place a DP on the chart? Yeah, exactly, you're dead right. Lynn said off the wave B, because that wave B high there, that is the last swing into that low. Do you see that? There's the last swing into that low. So we right mouse click, we do decision point. That would be an area of potential resistance. So as the market got up into that level, at the very least, you'd want to be bringing your stop to break even, at the very least, because that's where the market then reversed down to that level before it came back up again. And just on DPs, let's have a look at this. Let's have a look at the DP off this level. Look at that. That is the last swing into that high. Look where that reversal came in. In fact, it came in at a double DP support down there as well. It's amazing how these DPs work. But the point I'm saying is, do you see how that DP there gave you forward warning of an area of where this long trade may well reverse? I mean, you were sitting on about 4-hour profit at that level. So if you were nervous, you might want to come out there. But these levels are here to give you advanced warnings of areas of where markets can make reversals. Right, that's all I really want to talk about myself. So we've now got a few minutes now. So I'll open up to some questions. So does anyone have any questions on anything in general over the next few minutes? And hopefully any feedback on what I've been talking about today, in particular, how I've been talking about sort of the ugly side of trading, particularly how we've looked at markets that basically have turned out to be horrible patterns, particularly how we've been looking at, even though markets have looked to be really clear, that sometimes you will get losing trades. It's webinars like this that hopefully will make you your money by sort of allowing you to anticipate when things are going difficult. So I don't know about you, but I think it's really hard if you're only ever taught the good side of trading, the good side, or the perfect examples, because you don't know what to do when it doesn't look quite so good. You don't know what to do when it's not working out as anticipated. And I think if you actually can have that experience on the ugly side of trading, it will sort of equip you for what's going to happen over the weeks and months and years ahead. And that's what we want to do here at MTPredictor. We want to show you the sort of the ugly side as well as the good side to give you a full tool set to be able to use yourself. Yes, so if you're looking at the daily Forex, so let's have a look at the daily Forex. So like here's an example on the British pound. I mean, personally, I don't think it's going to carry on. It's going to go down off this TS3 sell setup. But, is this a valid trade setup? Here's a TSW3 short on the British pound. So what you'd do is you'd go out to the weekly chart and you see what the large trend is here. If anything, it's basically in the middle of no man's land with support coming in at that major low there. So if anything, the large trend on the pound is probably up at the moment. So when you're on a daily chart, you'd probably be very cautious about this sell setup because there's your weekly support. MTPredictor has also turned blue. So the trend here now on the British pound looks to be up. So that's why you'd look to avoid that sell setup. Let's have a look on the Euro GBP, that DP buy setup there. Again, you'd avoid it because the IMTP trend was red. You see that straight away. Let's have a look on this one here on the British pound, Japanese yen. Let's go out to the weekly chart. Weekly chart is not quite so clear until you put the DP on down there, which looks like it's at large degree support. So again there, if anything, the trend is potentially up. Very interesting. Here's the major low. This is the last swing into the low. Right mouse off, click off here, DP. This would be an area of potential resistance. This would be an area of potential resistance as this market is rallying up here. Look where we've got to, right at this level. So you never know, even though the large view trend is up on this particular one, you could actually get a bit of a decline down here while the weekly trend is still up. But it's amazing how these DPs do tend to nail these highs and lows beautifully if you know what pivots to use on them. And this is what I've tried to stress over these last weeks about which DPs to use, particularly the last swing into the major highs or lows. Does that make sense, everyone? PH said there's a good trade or potentially on feeder cattle. This is not one I would tend to look at myself, but we'll see if we can have a look at this one. Yeah, so this is what PH is saying, is there's the DP. off the last swing to the low. So we're at that level. So it'd be interesting to see whether feeder cattle actually rolls over for a potential short trade there. So Philippe, you're exactly right. That's, you know, you've been doing this for many a year. Philippe's one of our better traders. He's been with us for a very long time, so does very well. PH says he's still long. He's still long off that. So okay, it doesn't look like there's a particular MTPredictor trade set up, but if you are long, you're dead right. That's basically where you want to be tightening your stops. Yep, exactly. Tightening your stops on that because you're at potential resistance. So exactly right. So well done. Right. So any other questions or from anyone while we are just doing a review on that? Just close that one out while we're here. Let's just see what the USE minis are doing at the moment. Not doing much at all. Just open up a bit. Let's have a look and see if there's any higher time frame support and resistance levels. Let's take those off. Let's place a DP off here. Very difficult when you've got very narrow DPs like this and it's been very sideways. That's where you could probably go to the 24-hour chart. So this is what I've had on the 24-hour chart for a couple of days. So I had this yesterday as well because that was the last swing into the low. So I'll just take that off. That was the last swing into the low. Do you see that? So this pivot here is where I right mouse click and did decision points. That was the area of potential resistance. So, you know, on the 24-hour chart, that's what I was looking at yesterday to see if there was any potential resistance there, and there wasn't. So the E-minis are in that particular point in time when the pattern is not clear. But that's good because we know that the cycle goes round, and then the next area is slightly clearer pattern, and that's hopefully going to come in the next few days, within the next week. So when we come to do next week's webinar, we should have some nice things to talk about. As a trader, it's good because you're anticipating that you are going to get some good trades coming up. Right, I think everyone is now starting to finish up on questions. So we might end the webinar a couple of minutes early now. We're just a couple of minutes shy of the 40 minutes. So hope you've enjoyed today's webinar, particularly. Philippe's just come in with natural gas. What's the code for natural gas on that? Is it NG, is it, or not? Or is it a different one? That on Globex one, I'm guessing it might well be that one. Let's have a look. Just have a quick look at some of these ones I don't look at normally. We're looking at November. Oh, there we go. Absolutely perfect. Exactly what we're looking at. There's the last swing into the low. This is what we look at so often. Do you see all that? There's the major low. That's the last swing into the low. You right mouse click here. This is an area of potential resistance. Now, isn't that amazing? Knowing that, I just take this up on training mode here. You're right the way back here, okay? Knowing that that's an area of potential resistance. Isn't it absolutely amazing when this happens? You go up, you get your sell set up there. Your MTP trend is in the process of making a reversal because it's going grey. It hasn't quite reached its target, but down there around 6-hour profit. But just the whole idea of having that level on your chart in advance, so all the way as the market was through here, you just didn't know what was going on. It's just, well, I don't know. The market's random. The market is not knowing where it's going. We don't know what's happening. And suddenly you get into an area that you've had on your chart for weeks in advance, and you get a setup, and that's where it reverses and goes over. So you're right, Philippe. That's an absolutely beautiful example of how MTPredictor can be used, to anticipate these areas in advance. It's just lovely when this happens. Now, of course, as we saw from earlier in the webinar, it doesn't always work like that because there's our DAX trade. Nailed the high perfectly. The first trade there was great. You made 2.2 profit and it's all looking rosy. But then you had a couple of losing trades later on that basically took that profit away from you. You ended up pretty much break even for today. So, this can happen, but just having the tool like these DPs on the charts here in advance, it just gives you such a good edge of when the market gets into these levels of areas of where to be looking for reversals. They don't always work. Nothing is 100%, but it gives you the edge. And that's what Philippe says. He uses the DPs a lot. So he loves it that basically he says that's what makes MTP so great. Basically, the idea that you can anticipate these levels of when the picture becomes clear, and also the position sizing. So when you're wrong, obviously this is a big risk here, but when you're wrong, the loss is kept small. But when you're right, the profits are large, but not just in dollars, but large in relation to the losses. And that's the most important thing with trading, is you cannot be right all the time, but when you're wrong, those losses are kept small. But when you're right, those profits are large in relation to the profits. But using these DPs well will give you an idea of when the picture is clear, and that will at least give you a sort of heads up and basically put the probabilities on your side that the picture is clear at that particular point in time. And more importantly, when it's not, as we saw on the E-minis yesterday, more importantly, when the picture is not clear, this is just as important of when knowing when it's not clear, you stand aside. And that's quite a hard thing to do as amateur traders. It's trying to have a day when you're frustrated and don't quite know what's going on, is to have the experience and knowledge to say, I don't know what's going on, I'm going to stand aside. And that will save you so many silly losing trades. And also it will save you from denting your confidence as well. If you make silly losing trades in a day like yesterday, it will dent your confidence. So then you're not ready when the trades come through nicely. And that's what successful trading is all about. So I hope you've all enjoyed that. So a good finish there. So thank you, Philippe, for that. That's a very good example there. So everybody have a good trading week this week. If there are any questions that I've missed, or you think of any as soon as the webinar finishes, which quite often happens, drop me an email, direct email, steve@mtpredictor.com. Otherwise, have a great trading week next week, or over the next week, and we'll do it all again next week. So thank you, everyone. Have a good trading week, and see you all next week.